Ladies and gentlemen of the interwebs, we are live here with the Beacon Roundtable. What a week, gentlemen. Got Andrew and Gabe here today. I know it's only Wednesday, but still, what a week. We were just talking about the Jupiter airdrop. We'll talk about that towards the end of the show. But yeah, it's been a little bit since you guys have been here in the rotation. Just kind of wanted to say hello and find out, how's 2024 been going? Tell me what you believe what your landscape thoughts are for this year in 2024 in DeFi and crypto. Andrew, we'll start with you.
Oh man, so much. This is a wild year already. I think in general, the world of 2024 continues somewhat in the path of 2023, which means unstable, hard to predict, and volatile. Crypto is impacted by world events and kind of the entire world state, so that's kind of like starting there is my first piece. And Middle East tensions really escalating. We've got impacts on shipping delays that are going to be felt. They are going to be felt by the global economy, but probably not until at least Q3. And this is very not good for the US Federal Reserve's attempt to fight inflation. So my outlook on 2024, specifically getting more into crypto and DeFi, is that markets will be choppy to bullish until the Feds are forced to inject liquidity by Q4. And I believe that they will. But this can always be changed by new geopolitical events. If we get an ETH ETF approval in March, that's going to bring the timeline up quite a bit, I believe, and make things more bullish, more faster, if you will. But I also don't think we're completely we're not in up only territory yet. And my instinct is that there should be another fear event in the market by July. That the halvening in April is not just going to be an immediate up only season, but we've got a few more rocks. But this is going to be a wild year. That I am confident of.
It's going to be a watershed year for crypto, I think. So I completely agree. Gabe, what about you?
Yeah, kind of piggybacking a little bit on what Andrew said there. I agree with a lot of the things that he's saying. I do also think that if the Federal Reserve, if they're forced to inject more liquidity into the system, that typically makes the market turn more bullish. It would weaken the dollar, which usually the DXY tends to be an inverse of Bitcoin in terms of price movement. Not always one-to-one comparison, but on the whole, in general, that seems to be the case. Whether we have a fear event in crypto or not, I'm not totally convinced. I think crypto solves a lot of the problems that we're facing in the economy right now. And I'm also keeping a close eye on China specifically. I've been talking about China for a while, specifically the housing sector. And I know we'll go into it a bit during this call, but this week we saw Evergrande actually be forced to be, or there's a court order from Hong Kong forcing them to liquidate. And they're holding about $300 billion in debt. So yeah, it's going to be an interesting year. Strap in. Yeah.
Yeah, I didn't put it in the agenda, but what do we think about the U.S. government putting in what it was 130 million in Bitcoin from Mt. Gox Holdings that they were looking to put out? Do you think that has an effect on the market anytime soon?
130 million?
I might be off by that, but it's a pretty interesting chunk of Bitcoin that they're looking to put out.
Yeah, that's not really that significant. If you look at just the inflows, net inflows on the ETF products that released, we're starting to see those go up, and those are the trading volume on those is already way higher than 130 million. So I don't think that would have significant impact aside from just a fear factor.
Do we know how much Bitcoin they have? It's not 100. It's more than 100. Is it 130 million Bitcoin or higher than that? I'm totally misquoting it. Anyway, we'll just move on. Go ahead, Andrew. What were you saying? I didn't mean to cut you off.
All good. My instinct is, or what feels obvious is what Gabe said. I think this is a relatively insignificant amount of Bitcoin that they're looking to sell, relative to, like Gabe was saying, net inflows for the ETFs. However, there could still be some negative press and some negative sentiment around it. Like, the number doesn't matter. The news story maybe does. But I don't think it will.
Just looking it up, Mt. Gox, ballpark around 142,000 Bitcoin, which is a very significant amount if all of that were to be released. I don't think that's going to happen, but the fear of that happening could cause significant impact, yeah.
Yeah, it could. But like you said, we're talking about inflows, and that kind of walks us into our first point today, where it looks like, from an inflow perspective, we may be bottoming out on GBTC outflows, which hopefully could spell, this could be an area where, this is probably your best spot if you're going to be DCAing or trying to time the market. Obviously not financial advice, do your own research. This could be a spot where, we're in a little lull, a little gully, if you want to call it that, to start a movement forward, not up only, but forward up the chart. What do you guys
To
think?
be clear, I don't hold any GBTC. I
Neither
think
do
if you're already in crypto, there's no reason to hold GBTC. It's mainly a product for people that want to get into crypto and they don't already have any. There's significant fees attached to it.
Yeah, and the discount rate's been fluctuating quite a bit. I know that there are quite a few people who are getting out of GBTC to get into purchasing the ETFs. If that's you, in the comments, let us know. I'm curious to know if that's you.
ETFs also have fees. I'd rather just buy spot.
Yeah, true, absolutely. But if you're going to be doing it, through like a financial advisor, a manager, it is a way to get some exposure throughout the market. Probably we'll see maybe pension plans moving forward. I don't know. What do you think, Andrew? From a public retirement standpoint, do you think that with the ETFs we'll see more movement into these by those types of funds?
Yes. Short answer is yes. I don't know how quickly. I think this is good. This is a good thing for crypto. This is a good thing for investors that are looking for a flight to value, if you will. So I don't think like overnight we're going to see a bunch of pension funds and 401ks, allocate 50% to Bitcoin, and it just rips from that alone. But this is going to accelerate adoption or for folks that aren't interested in self-custody and aren't interested in jumping through the hoops to like allow themselves to have a self-directed IRA, for instance. This is exposing traditional this is exposing folks and funds that are very in the TradFi space to be able to get exposure to Bitcoin. It's good for everyone.
Yeah, I think that's kind of the main value proposition as well, like allowing TradFi investors, allowing businesses to invest into crypto through a regulated element. That's kind of the main value proposition I see from the ETF products. Less interesting for people that are already in crypto, aside from the fact that it could have an impact on the price itself.
Well, yeah, I completely agree. But do you know what also is good for everybody? Smashing that like
Sunshine?
button. No, smashing that like button, sir. So yes, if you haven't hit the like button and you're here watching us today, please do hit the like button. We'd love for you to do that. No, subscribe, hit the bell icon. You'll know when we go live next week, specifically as we have more and more content coming with ETH Denver coming up in less than 30 days now. We're very close to the main event. Super excited to see you all in Denver. Can't believe it's already here, to be quite honest. But something else that's here today. There's going to be a Fed meeting today. Interesting opinion take here from CNN today, which is why I chose this one. So last December, obviously a year full of rate hikes. The Fed mentioned that there are intents to hopefully reduce those hikes in 2024, but frankly, they haven't gotten back down below 2% in terms of inflation. So Gabe, I wanted to ask you, based on that, I think it's priced in that the rates are going to hold, but do you think what do you think the Fed's going to do with regards to pulling back those hikes?
I mean, in this meeting, I would say above 95% certainty that they're going to hold rates. I don't know if we're going to see any rate cuts in Q1. I kind of doubt it. Later on in 2024, I think it mainly depends on like the global economical situation and whether they're forced to lower rates. But yeah, that remains to be seen. For this meeting, very certain that they're going to hold rates.
Yeah, Andrew, so we're kind of in a weird spot because, obviously we're looking to see where this is going to go, but we're also in an election year. So I just wanted to kind of get your opinion on, I know you mentioned they're going to be hopefully putting in, liquidity back into the system end of the year in Q4, I think is what you said earlier. So either way, it's got to be good for crypto, right?
Yes. Okay, so from looking at the situation right now, like I don't think it really makes sense for them to cut rates. Inflation could still be lowered, unemployment's down. Like I don't know, they're really looking at the right metrics, but the metrics that they are looking at, it looks like what they're doing and the status quo is working somewhat. My belief or my projection is that due to it being an election year and due to the impacts of global shipping delays and really just it's going to be more expensive to do business around the world because shipping is going to be more expensive because of insurance rates and also because of longer distances to avoid hot zones. It's just going to be more expensive, and that is going to look like inflation. It's going to look like inflation because a bunch of stuff is going to get more expensive. So that is not good for the Fed's mandate on maintaining price stability. That is a destabilizing factor for prices. And it's also not going to look good for the political status quo in an election year in America. So my whole idea of why they will be forced to inject liquidity is because of costs going up. Excuse me, because of costs going up due to shipping costs and insurance costs. So if I'm wrong about that, here, give me 1 second. I'll just stop there.
No, you're fine. So good old Benjamin Cowan, if you guys are fans of Into the Cryptoverse. He did say, today is the most important FOMC of our lives until the next one. And I think, looking at this meeting by meeting is a little fun, but I think you make a ton of good points. Kind of transitioning out of that, one thing that's kind of a hangover from what happened last year, specifically is something called the Bank Term Funding Program, or what do we call it? Buy the effing pivot, I think is what we ended up calling it. Ultimately, this was a funding program made to banks in the wake of the liquidity crunch caused from the failure of Silicon Valley Bank and Signature Bank. So this is a program that's been going on for a year. They're actually going to be ceasing making new loans on March 11th. In fact, they're actually going to be raising the rates on any BTFP loans, I believe, starting tomorrow, according to this article from Reuters. So, Gabe, for those who are not familiar with how this system particularly works, if you could take a second to kind of talk about ultimately what's the main result of what they've done here with the BTFP with regards to the Fed taking on loans.
Yeah, so essentially the reason it was implemented is a lot of regional banks specifically were facing cash crunches and weren't able to fulfill withdrawals from customers. And so what the Federal Reserve did by introducing this is basically allow banks to borrow on their long-term portfolios, so long-term bonds and treasuries, at par for the value. So it's not the current market price, but at par for the value of the bond. They were able to borrow, I believe, 100% of that value, or up to 100% of the value. And this just basically solved cash issues for banks because they weren't stuck with their long-term bonds. They didn't have to dump them on the market. They could just borrow at par and fulfill withdrawals that way. But this obviously adds more to the Fed's balance sheet, more debt to the Fed's balance sheet.
Yeah, according to this article, it's saying 160 billion, but we think the amount is actually much larger than that, right?
I don't have exact figures in front of me. If it says that 160 billion has been borrowed, then that's probably accurate.
Okay. In either case, it's a lot of money for the Fed to kind of take on, and the effects of that, I guess we're going to have to see how long those effects last. I just wanted to say thanks for Tanner for this thought. With the Fed meeting and just talking about that they may possibly cut 25 basis points in March. But Andrew, did you want to finish your thought from earlier?
I think I probably kind of finished it. Just
okay.
Global shipping should be more expensive, world chaotic. The whole idea of why liquidity would need to be injected is because something else goes wrong. And right now, global shipping appears to be a ticking time bomb that, like, it's already gone wrong and the impacts aren't going to be felt for multiple quarters. So we'll see.
Yep, we'll see. One thing we talked about at the beginning, with Gabe and his thoughts on 2024 is that Evergrande ordered to liquidate by a Hong Kong court. This is a take from the AP saying that it's, one step in fixing China's debt crisis. They've obviously been having debt issues for quite some time now, something that we've talked about specifically in our mastermind through a lot of our talks, thanks to Gabe. I guess the good thing is that at least from everything we've heard, the link between Evergrande and Tether seems to be gone. And I think that was like a worry that some people were worried that some of the paper that was backing Tether was from Evergrande. But it seems to be that that's against what Tether has put out recently. But wanted to get your take, Gabe, on how you feel this may cause shockwaves, at least from a Chinese perspective moving forward.
Yeah, so I think the housing sector in China I think it's pretty clear it's been struggling a lot in the last couple of years. The Evergrande crisis kind of began in 2021, and they've been trying to get to a solution that works, but ultimately now they're being forced to liquidate. I don't think they're going to get anywhere near that 340 billion that they have in debt, so likely people are not going to be made anywhere close to whole on that investment. Yeah, China has a massive problem in their housing sector. There's not just Evergrande that's in trouble. There's lots of big housing companies in China that are facing similar issues. Evergrande was just the worst of the bunch. I think we'll see more of them failing over the next couple of years.
Do you think it's going to have Yeah, do you think it's going to have a huge impact on the global economy, like from a macro perspective moving forward?
I think it'll have some impact. We haven't seen this. I mean, it's not been considered like a black swan event or anything like that. We haven't seen that much ripple effects from Evergrande being forced to liquidate. But what the long-term ramifications are going to be, it's not clear yet. Especially if we see other giants like Country Garden or other large housing companies in China fail.
Yeah, agreed. Dan, with the take, yeah, Tether profitability. We talked about this last week, with Tether being the number 3 crypto behind BTC and ETH practically with regards to market cap. Just the amount of profitability. I think we didn't put it in the agenda, but the Q4 was several hundred billion. I think it was a crazy number in terms of, it was record profit, right, Gabe?
2.85, I believe. Yeah, 2.85 billion in Q4.
Yeah, and they're hedging, specifically because they have the crypto mining initiative. They're in liquidity. They're nearing 70% dominance in the stablecoin market.
Yeah, I mean, it makes sense. They have a very large portion in short-term bonds, and bond rate payouts have been way higher, so it makes sense their profitability would go up.
Yeah, they own more T-bills than multiple countries in the world. They're like in the top 25 owners of T-bills. What are you gonna say, Andrew?
Yeah, I want to ask Gabe a quick question. Now, I totally know the answer to this, but I'm assuming that there's some folks that are watching this that don't necessarily know the answer. I know you're an expert on China, especially Chinese real estate, Gabe. Wink, wink. How is a Hong Kong court doing something with a mainland China system while mainland China wants Hong Kong's territory back? How is this actually enforceable? Is anything that a Hong Kong court, does it actually matter?
I think it does matter, yeah. I don't know whether it's going to be enforceable or not. I believe it will be. Yeah, what were your thoughts on it?
China's weird. They pretend to be capitalist, and they are with some things, but they aren't really. And I do not even begin to pretend to understand the Chinese legal system and how the Chinese legal system, the Hong Kong legal system intersect or don't intersect. So when I said that I totally understood, but could you explain for the audience? I was really saying, hey, do you know, and could you explain it for me?
No, I no. Hong Kong is very different from the rest of China. They kind of play by their own rules.
Yes, but all the real estate stuff that's happening is mainly in mainland China with Evergrande, though.
Yeah. That doesn't necessarily mean that the company is based there. I'm not sure where it's incorporated or how that plays into it. But yeah, Hong Kong, especially their court and legal system, is generally considered more fair and less controlled by the state. But yeah, whether they're able to enforce it, I mean, a lot of these housing complexes and a lot of the buildings, a lot of the assets that Evergrande holds is not in Hong Kong, right? So how that's going to be enforced, I'm not sure.
Not great for China.
Yeah, not great for China for sure. So we'll go ahead and move on to a different topic real quick. And that is Vitalik went ahead and posted a blog post yesterday. And I'll put it here in the chat for anybody who wants to read it while we talk about it. It's an interesting article regarding the promise and challenges of crypto and AI applications. So this is something that Vitalik's a pretty avid, very frequent blogger. Has a lot of, we tend to normally cover most of the things he blogs. This is a very interesting idea. Not an idea, but just seeing his take on this. Obviously, there's a lot of utility that AI can bring. And what I thought was interesting was specifically about how AI can be used to be both an interface to how DeFi works, as well as an objective, I guess, in terms of using it to help automate decision making, helping with using AI as a learning model to help personalize DeFi experiences, doing so in a neutral way that minimizes both bias and possibly unfairness. And yeah, I mean, using AI to make possibly a world where code rules a lot more machine-like, I guess. It's an interesting take with regards to, specifically the major categories where he feels that how he can categorize it, which is, AI being a player in the game, an interface to the game, ruling over the rules of the game, and being the objective of the game, which I thought was an interesting take. That's something I personally hadn't thought of. Any quick thoughts on this post, if you guys had read through it a little bit, or your personal thoughts on AI and crypto? Start with you, Andrew.
Yeah, I haven't read it yet. It sounds like I have a question though, because it sounds like you've read it. Did he talk about like using AI to respond to code exploits and such at all? Is that part of this discussion?
It could be, because it's part of the utility, right? It's part of the synergies to help with transparency, not necessarily innovation, but cost cutting perhaps. Because if there's one thing that's expensive in this space, it's audits, right? If you're a new protocol looking to come through, to be established, security is a huge thing in this space, right? Investors who want to come in want to make sure that they're investing in something that's not a complete rug, in order to give the peace of mind to investors to put TVL into your protocol. You have to have an audit. In some cases, multiple audits, and in some cases, a bug bounty, an active security auditing system to monitor and make sure there are no exploits, or to at least address any issues that there are. And none of these come cheap. Specifically for smart contract auditing, we're talking tens of thousands of dollars, and they can charge this much because that's just how much it's cost. In fact, the cost has actually gone up quite a bit since
free market, supply and demand.
Exactly. So ultimately, AI could be a huge. I mean, we've already heard about one company who we met at Denver last year who shut down in the face of lack of work because of AI. So yeah.
All right, I have a follow up now. Let's
go
get
ahead.
more. Yeah. So my follow up is AI is a big deal, especially generative AI around code and looking for problems in code. I was kind of interested if Vitalik was kind of coming in a direction of something that I had thought of, which is ultimately something that I think could solve a lot of issues in DeFi if this could be implemented. This is pretty futurist. This is pretty pie in the sky, but I think it's technically possible in the next decade. And that is, we have a world of smart contracts where code is law and AI are the judges. So you can have laws, but sometimes, hey, the laws aren't written properly, or the contract isn't strict enough. You essentially need a judge or a jury to interpret the spirit of that law. And the spirit of the law probably isn't it being exploited. So I see a world where, we could have blockchains where it's possible to have some transactions reverted without having to do a hard fork. Essentially, if the AI that judges that chain deems that it was against the spirit of the rules.
That's exactly what this is right here, sir.
There we go. Vitalik, I don't want to take too much. I don't want to take credit for this. I didn't tell him. about my thoughts, but yeah, that's it. It's really logical.
It's also, if I can jump in, it's also
Yeah, go ahead.
very risky. Like it would take an extreme amount of testing to make sure that the AI behaved in a way that we would expect it to. And even beyond that, I mean, we've seen just through ChatGPT how easy it is through, manipulating prompts, how easy it is to get around certain rules and intent of the creators of the AI. And having that enforced on a blockchain level and having some form of control over the blockchain, you would have to be sure that the AI would act and behave the way that you wanted it to be able to do that, right?
Here's what
Yeah.
you do, Gabe. You use some aspects of the game theory of the proof of stake model. You have multiple AIs developed, and it's like a jury of AIs. And if your AI is out of the consensus, then you get slashed. So there is incentive for there to be consistency around the AI judgments and for them to be kind of developed differently. But yes, this is something that would take a lot of work and it would require a lot of testing. I would say just like the entire decentralized financial system we're building, a lot of work, a lot of testing.
Yeah, and I think you get around the issue that we've seen with a lot of exploits recently, and that's the human error piece, right? You could probably build in new interfaces that don't require human interaction. So that takes out things like SIM swap attacks, really bad OPSEC. You could use that to help enforce just how things work. So as part of this as well, he's talked about interfacing with regards to helping provide safety, like wallet simulations, like in Rabby or in Wallet Guard. Yeah, this is all part of his talk too. So I think this is something that most people can agree is something that's already in, that's helpful. But I do like this idea about being the judgment of this. I mean, obviously, I laugh at the idea of a Gensler AI coming in and exactly how it tries to argue with the other AIs in consensus. No, it wouldn't do that, but you could certainly program parameters around that. So, but yeah, so essentially trying to figure out how all this works, and he puts a lot of work into this. My goodness. Yeah. So there's a lot to this article. I recommend everybody read it. Regardless of how you feel about crypto and AI, I personally like the idea of using it to help make you as an investor more aware, more educated, and not necessarily make your decisions for you. I think you should still be in control of that. But using it as a tool to help you come to those decisions, I think is very, very important. Andrew, what other AI types of utility do you think is out there that I haven't talked about that you think would be helpful for investors in the space moving forward?
Oh man, I think we've covered kind of the basics. Like we've covered using AI just to make the underlying tech more robust, better real-time auditing, better detection of exploits. This is kind of already happening in a lot of ways behind the scenes. AI judges, a big one. But if we're talking in terms of AI judges, I think, oh man, this is getting extremely theoretical, but AI agents that do things for you in accordance with your wishes. If you have a goal or you have a strategy and it's refined, that is something that should theoretically be able to be implemented by an AI agent acting on your behalf. So I think that's a big part of the end game of AI and kind of AI human integration is just like we could train a generative AI to read our email, read our calendar, know what we've said in the past, and predict what we would do, and then respond accordingly to new inputs. We could do the same thing with managing financial portfolios and DeFi strategies and what we want to do. Just like we could have it, book flights for us and plan our itineraries. So that sort of like user-focused AI agent kind of thing is something that I don't know that it's particularly coming for DeFi and crypto specifically, but I think it's coming for everything.
What about you, Gabe?
Yeah, I think the most interesting aspect to me, like you said, we see a lot of exploits and things like that happening in crypto, and the idea of AI being able to help monitor and protect in real time. Because code is immutable. Like once it's available on the blockchain, people can use it to perform malicious acts. But the idea of having an AI that both monitors, predicted behavior on using a protocol or using code, and then having the ability to stop the system if it encounters something outside of what it expects. So, for example, someone draining the entire liquidity pool on Curve and taking 30 million out with one flash loan transaction, that's probably not expected behavior. And then having the ability to shut down that transaction and stop that from going through, and then having a human look it through and verify it before it actually executes.
Yes.
I think that's really interesting. And then also just having it work in real time, constantly making sure that the code is secure, making sure it's up to date from any other vulnerabilities that have been found, and sort of having multiple AI models collaborating on doing that and just making it safer for everyone.
Yeah, I could definitely see Monte Carlo simulations and stuff like that being used with AI to help provide good real-time probabilities, I guess. I think there's so much we could do. So completely agree, with what you're saying there. Yeah, let me know in the comments what you guys think. What would be a good application of UI in DeFi or on-chain finance? Would love to hear your thoughts. Obviously there's some utility that's already out there that's being used, but whether good or bad, curious to know, where you think that line needs to be drawn. Because obviously there has to be a line somewhere where, we can't have AI taking over too much of how things are done in DeFi. I'm sure there's a line. I don't know what that is, but maybe there isn't one. But would love to hear your take about that in the comments. If you're watching this live, if you're here, watching the recording. So moving on, for anyone who uses MetaMask, you have a new option to off-ramp crypto, and that is through Transac, an existing payment provider. I think they are KYC'd, but Visa is going to partner with them to provide through their Visa Direct rails to provide a way to easily spend your crypto. I guess from your Visa Direct balance. I think that might be how it works. Essentially, you just have a crypto to fiat conversion mechanism that is available to anyone in MetaMask, I think is where it's currently going first, which means it should be available for other wallets soon. But they will support 40 cryptocurrencies to 135 different local fiat currencies around the world. This is very interesting.
Love it. What are the fees like?
Yeah, that's it. That's the thing, right? Transac is always Transac, MoonPay, even Cato. All of these, direct on-ramps, it's always been what are the fees, right? And essentially, is it worth bypassing a traditional CEX to get that into your bank account or putting it into a spot where you can spend it? Right that in there. Yeah, it's definitely going to be a convenience fee more than anything. It's all about, I guess, size and whether it makes sense. Can you buy a house with a credit card?
Completely depends on the fees. Whether I would use it personally. I'm guessing the fees are going to be higher than just going through a CEX. You have to pay for convenience, and this is convenience.
Oh yeah.
I think it's great for crypto. I think it's great for the space that they're doing this. And then it's up to people if they want to use it, depending on the fees. Yeah.
Yeah, I didn't realize the Transac was an accelerator product. that's backed by Consensus, Animoca Brands, and a couple other VCs. So I didn't realize that. I thought it was just some payment rail that charged way too high fees. But, this is a big dub for crypto if we're looking at, because it's an API-driven solution too, just like Stripe. So literally with a few lines of code, you can put this into your on-ramp, off-ramp widget, which is pretty big. What are you going to say, Andrew?
Wasn't Transac integrated with QuickSwap like on Polygon launch? Like, hasn't this been around forever?
Yeah, you can buy crypto directly in MetaMask using Transac. I do believe you have to KYC with them on the fiat side before that goes through, and I believe you have to give your social security number, if I'm not mistaken, if you're a U.S. resident. So there is that. So if you're not down with that, then this may not be the way for you. But if you're looking for a pretty convenient off-ramp, specifically if you're unbanked or you're in an area that's underserved by financial systems, this could be, if you're like Napoleon and you live on the island of Elba, out in the Mediterranean, this could be, saving grace for you because you have a way to, with your crypto holdings or investments, have a way to easily spend anything you want to take out of the system, whether it be profit or you're just liquidating for any particular reason. So looking forward to seeing how this is integrated. I will say that the majority of MetaMask off-ramp solutions are not the cheapest by any stretch. And anybody who's ever done it can probably attest to that. But I'm curious to see, I guess from a fee perspective, how this compares to like PayPal's off-ramp with PYUSD and other services like that are offering through MetaMask and probably through Rabby and some of these others fairly soon, specifically how this would work. So yeah, really interesting, and good to hear that there's movement on this. For those of you who aren't aware, Visa's been in the DeFi space for a very long time, at least 3 to 4 years, where they're testing, where they're partnering with other protocols to provide, settlement rails. They've done a lot of research in the space, so this is not something that they just dreamed up out of nowhere. They've been in this space testing for a very, very long time. So, yeah, this is good to see. Before we go to the big ending event today, we're going to talk about one thing. If you are in MIM, yikes. MIM lost peg yesterday. Was it yesterday?
Yeah.
Down to 77 cents. MIM is a decentralized stablecoin from Abracadabra, which is a Frog Nation protocol for the most part. And they mint based on supply when everything's backed 1-to-1 in the treasury. However, they do have cauldrons. I don't know if they're necessarily like the Abracadabra cauldrons from before, like with the UST cauldrons that were on mainnet. But I guess there is a rounding issue, these rounding exploits, and someone was able to walk away with quite a bit of money, which caused the DPEG. It's back up to about 95. I haven't checked it this morning as to
98 cents now.
Oh, they're back up pretty much close to peg. Well, there was a discount for you there if you were happy with MIM, and I think they did burn a bit of the treasury to get it back there. So
I didn't hold MIM before, and I'm not planning on buying MIM now.
Yeah, so I guess that's the question. It's like, obviously, we love the idea of decentralized stablecoins because obviously Tether, Circle, which is USDC, are centralized stablecoins. So, and DAI is made up of mostly USDC. So the truly decentralized stablecoins, like MIM and some of these others, you want to pull for them, but at the same time, it's like they can be vulnerable to these types of attacks, which causes a problem. So, Andrew, are you going to be loading back up on MIM anytime soon?
Nah, everything Danny's ever touched has just turned to crap, unfortunately.
Unfortunately.
So I'm gonna FUD the frog. there might have been an opportunity to make a 15% scalp buying the dip on MIM and betting that they were going to try to fix it in the short term.
Mm-hmm.
But like that is a tricky bet to make, and because it's like, unless you know for certain that it is fully backed and that no human error moving forward can mess it up, you're essentially betting that like there's one scenario where like you buy at 77 cents and it literally goes to zero, or you make 20%. So that's like the definition of asymmetric downside.
Yeah.
So anyway, yeah, not gonna get any MIM now. Kind of haven't been touching it for a while.
The fact that 6.5 million could cost this kind of issue is insane for a stablecoin. Like,
it's small cap now. That's the other thing. It's small cap.
Yeah, it's a small cap. That's true.
Small cap stables can have, are less resilient around issues like this. If there was an exploit and DAI lost $10 million, it wouldn't matter.
Yeah. I mean, ultimately, 2 years ago, this would have been a nothing burger, because Alameda was still the largest holder of MIM. Yeah.
Another reason to not buy MIM.
Exactly. But so yeah, just letting everybody know, if you're in MIM, obviously it's getting close back to peg, but just be careful. I know that there's a lot of stablecoin pools out there with MIM that have pretty decent rates. Obviously, those took a hit.
The rates might be up though. I haven't
the
checked.
Rates might be supremely up actually, but at the same time, just be aware. Ultimately, this is not really that different than what happened with USDC, except I think the majority of people thought that USDC was coming back from peg. So if you got in at 88 cents on USDC on the way back to the repeg, congrats.
Yeah, I mean that was just a weird no-brainer.
Yeah, but I wouldn't have thought that here. When I saw that there was like, there was a moment where I was like, should I buy MIM? I'm like, oh, no. That's probably not a good idea. But
asymmetric downside.
Yeah. So yeah, things that you think about as a DeFi native, it's an on-chain native. Just something to think about while you're out there. If you see things like this, evaluating, making sure that if you see something like this, if it's like a sell the news event, or if it's something that you just hold on and maybe it's an opportunity, something to consider with your mindset. Now,
man, it's I just add like a fun like little nostalgia / history bit. This is making me remember about a time where I shorted MIM using lending platforms because there was some FUD and we thought it might depeg, and it was like at the time extremely cheap to just short it for a day. So I was kind of like, either I lose a little bit in interest, or if MIM goes to zero, I'm super happy. So, if I would have held that for like a year, but I couldn't have held that for a year. That would have been,
that's a big ask.
Yeah, I mean, but
was it 100?
It was on Phantom. It wasn't on 100. It was using a variety of lending platforms that had the best rates.
Oh, that's a Molotov cocktail if I've not heard one.
That I was shorting MIM on a variety of
lending platforms on Phantom blockchain. Yeah,
there's kind of risk as well. Yeah,
it was a long time ago. I held that exposure for a very short amount of time. But that was a situation where it's asymmetric upside, right? So it's like either I lose a few basis points on interest, or I make 50% plus in a day.
No, you're right.
So I would much rather do that than buy a low cap stablecoin at 77 cents.
I share Tom's sentiment. If it were me, I would have bought MIM. It would have collapsed. That's essentially my luck. So I did want to say, to bring this up in terms of regards to operational security, we call OPSEC. We have to state, just from a safety perspective, and I'm seeing this across the board, even this morning, teams getting their Discords hacked, Twitter's hacked. Obviously, what we talked about last week with the Trezor support portal, the MailerLite support portal, and people getting yoinked for ETH and other coins through phishing expeditions on email. There's just so much out there. Again, use 2FA with not SMS if you're going to be doing 2FA. Don't get SimSwap attacked. Please treat all links that you're seeing out there carefully and consider that all links that you see, regardless of where they come from, are not trustable, not verified. Verify officially with the community. Of course, you can ask us. We can look into it and give our opinion. But at the end of the day, do your own research. Make sure that you have high conviction in what you're doing, because there's a lot of bad actors out there. I even know people that got yoinked from their Jupiter airdrop because they clicked on a link that happened before the claim was even open. And it's just these things, you know, I get FOMO. I understand you're not going to be early on stuff like this. So please.
I think an expression that kind of works here that comes from somewhere else is measure twice, cut once. Always double verify, always triple verify what you're doing, especially if you're doing it at volume. Anything that you're signing or interacting with your wallet, always just double check, make sure you know what you're doing, make sure you're doing the correct thing that you're trying to do. And yeah, don't act in haste. If someone's trying to make you act fast, they're probably doing that for a reason.
Yep. A stitch in time saves 9, I believe. There's a bunch of little sayings out there that we could go through. But we'll head over to...
Fool me once. Shame on you. Fool me twice. I won't get fooled again.
There you go. Wasn't it shame on me? Yeah.
That's a joke.
Yeah, you're right. All right. So, it's Jupiter Day. Jupuary. Jupiter, the aggregator from Solana. This is a screenshot because I couldn't get it on this browser. Just giving you a heads up on what I was able to claim. For the majority of our mastermind who followed us when we talked about Solana through the years, you should have gotten a decent drop on this. I know multiple people that have 6-figure jupe drops. So ultimately, do what you want. Obviously not financial advice. If this is your day to take profits, congratulations. So let us know what you're doing with your in the comments with your jupe airdrop. Most of us are planning on selling a portion, holding the rest, seeing where we go from here. But Jupiter launching today with their airdrop. They had an airdrop last week called WEN, W-E-N. That last name to claim was the 29th. So, we'll see where that goes. But chart's kind of shaky on that. That's more of a Starbucks airdrop, as we like to call it, because it's not really worth all that much, but could go up, and so could jupe. So for those of you who sold and got a nice 4-figure payday just for following along and doing things that we did regularly in the mastermind, congratulations. We're eating good, we're winning, and that's why Beacon is Beacon. Thoughts, Andrew and Gabe?
Congrats on the free millies, community.
Exactly.
Yeah, thanks for the free money. I sold mine. Not going to look at it again.
Sold it all. Good man. Yeah, so congrats to everybody who was able to qualify for that. I think Snapshot was back in November. Claim for jupe is good till the 31st of July, if I'm not mistaken. But you can check in the show notes for the link to go check, or you can just go on to their official Twitter. Jupiter is an aggregator, one of the few actual DEX aggregators on Solana. How that's possible, I don't know. I mean, Orca as well as an aggregator, but Jupiter aggregates them as well. So I know they're integrating a trading terminal and all kinds of good stuff. So
Chris,
go ahead.
Back in my day when I was first getting on Solana, you had to use Jupiter. You know why?
Because Wormhole is the absolute shit.
Yeah, because you had some wrapped stuff that pretty much only Jupiter had liquidity for.
Exactly.
So I've gotten this airdrop simply for the reason that I'm old in DeFi now, and I had to use Jupiter. I was literally forced to use Jupiter and use Jupiter with size in the last market cycle.
You know, it's funny. There's actually like a $400 OG premium, and I got that. So that's like that. I mean, looking at the amount that
There you go.
that's $200. It's free money. So congrats to everybody who's been with us, who's able to cash in on that, and looking forward to more. And just wanted to share that with you all, and hopefully you all are off to, obviously account for taxes, not tax advice, but make sure, it based on the recent IRS things, it does count as income. So keep that in mind.
Oh,
And that's
buzzkill.
I know. I got to keep it real. Got to keep it a buck with the crowd, guys.
For real.
ONG. That's all we got for you guys today. Just wanted to thank Gabe and Andrew for hopping on, being part of the rotations. We talked about a lot of interesting macro and global stuff. Hopefully you guys found value today. Again, please like, subscribe, hit the bell. We'll see you next week. 07.
07.
Have a great day, guys. Enjoy your Wednesday. Enjoy Jupiter Day. Go out and get that claim.
Jupuary.
Jupuary.